Brilliant, brilliant. Morning, Edward. Morning, Pan. Did Mark, Tom, Richard, of course. Viz, good to see you here. Steve. Right, well, Happy New Year, everybody. And one hopes it's going to be a reasonably prosperous new year. So, what we're going to be just taking a little... that's great. Many thanks. Absolutely, absolutely. Yeah, let's put 2015 behind us, which was quite an exciting year in many ways. We've got what is that chap, Martin Armstrong, the Armstrong economics, the man who's sort of telling us, or at least he was supposed to have picked the 2008 crash to the day, apparently, to the day. And he's told us that the stock market, and I think we might just start there, he's told us that the stock market is, and has turned, I should say, has turned, I've forgotten the date now, but what was it? It was October, I think it was October the 15th, something like that, was the turning point for the stock market. That's 2015, of course. And that we're now in a bear market. His basic tenet is that every 8.6 years, then the market takes a tumble. So let's just have a little look at that, the S&P daily. Here we are. This is the S&P. And we're looking at MT4 charts, by the way, MT4 charts. So if we roll this right the way out to the monthly, let's just put a whole stack of data on here where we can go back to, let's just squeeze a little more data in. Right, there we are. And there we go. 2007, I should have said. So that's what he told us, that there was going to be, something of a bit of a problem there. There most certainly was. And he's then extrapolated it forward, and there's something like, others may want to know the detail of this, but he'd changed the 8.6 years into something like some 1,000 days or whatever it was. And that equated to pi. Yeah. Okay. Anyway, we can have sort of various predictions based on all sorts of different things, but I suppose that we should just sit up and take a little bit of notice where somebody of his, yeah, absolutely. And I guess Nostradamus, of course, anyone who's been sort of reading the New Year predictions from Nostradamus, well, I haven't. I don't. But it's all good fun. It's all good fun. Now, if we just consider this for a moment, then, yeah, we've had this massive rally then, since the Fed decided that, oh, my goodness me, the world is coming to an end. We've got to provide some liquidity. And they provided liquidity. And, of course, this is a liquidity rally which has just been sort of rising like crazy. We are possibly at a major juncture of some degree. We've certainly had, on this little first run up, we had a little correction. We had a nice little ABC run, which looked as if we might have got another crash. And if we get a trend, we've got an ABC that we can see. We've got an A move, a B move, and a C move against the main trend. Then we have to sort of be very, very cautious at the point C. And indeed, we had quite a few, as we can see. We've got the odd harmonic line picking up there, and it looked very much as if we were about to get a continuation of the crash trend. Exactly the opposite has happened, and then we get this massive wave up. And there are those who will look at this, Elliott wave watchers, of which I'm one, and they will say, right, we've got a big wave one, we got a reasonably big correction, and what this could result in then is following this big wave, which arguably we could say that this is a third wave, That's assuming that this is a first wave. Well, you know, those who know a bit about Elliott wave would say, right, well, okay, where's the fifth wave? So we get a strong wave. These are the sort of, some call them motive wave, but it's a wave which it just goes shooting on up. So we've got a wave one, a wave three. Where's this wave five? We haven't seen it yet. So where's it going to start? Could it be starting here, and that's going to go up into the stratosphere? Or indeed, is this correction going to need to be a little A, B, C correction? As indeed this one was. If you look at that closely, we've got an A, B, C correction. And some of my software is just actually picking that out. We can see where the swing trend did a little blip. So could we be on for a wave five? That is the big open question. And it's whenever we can maybe just take a little snapshot, if we can, of the psychology of the number of analysts out there telling us that we are just about to crash. Where there is the majority of those telling us that we've got a crash imminent, that is exactly the time when the opposite is going to happen. So we need to sort of just bear all of that in mind to a very great extent. And the best time to buy is when everyone is bearish, and of course the best time to sell is when everyone is massively bullish. Because the majority of participants, and this is hedge funds and analysts included, professional analysts, when they're at the most bullish, then the market is at its most fragile. So we've got, yeah, absolutely. Yeah, the gold market, when we're at the most bullish, that's exactly when we're most likely to find where we get a tumble. And here we are. Let's just take a little glance at gold, because it's well worth just considering what actually happened with this massive rise. So there we are, up. You know, it reached this general area of what was it, 800 and something or other, that it got to in 1981. Remember it well. Had 20 Krugerrands that I used to carry around in my pocket, and those Krugerrands, well, anyway, made a nice little lump at the time. And of course, up at the top here, right, great market to trade. I mean, we were picking up really closely correlations with gold and oil back in those times, and now that we've seen the oil price collapse, then it's entirely possible that based purely on that correlation, gold really ought to be an awful lot lower than it is right now. You know, that's one way of looking at it. But of course, at these peaks, then we've got a lot of people saying that, oh, well, it's going on up. And of course, they extrapolate it. And we had the sort of the 10,000 figures, the even 25,000, some sort of crazy figures of valuation of gold just going forward. What's actually happening now is that it seems to be settling, and it's entirely possible that what we're looking at, I've just mentioned a little bit about wave theory. Well, we can just look on that as being maybe a wave one down, a wave two, and have we seen the end of wave three? Well, there are those who are saying that, well, possibly that could be the end of wave three. But there are also others who are saying that, no, we haven't actually seen the end of wave three yet. And what we could be looking to see is some form of a rally, a little rally that could peter out. There are others who are saying that, well, no, that was wave three. And then what we've actually got is this wave four, And we're now looking for a wave 5, which could send us down into somewhere territory. So there's no foregone conclusion in either direction. And of course, gold, what does gold reflect? It reflects to a very, very great extent inflation or the prospects of it. And back in 1981, we had a previous massive inflation going back to, well, from around about the late 72. 1973 was a massive inflation time. And of course, that was when gold absolutely shot up and peaked at around about the time that interest rates were really rising strongly in order to try and kill off, back in the Volcker years, try to kill off the massive inflation, which was causing so much damage. But of course, right now, we get analysts saying, yeah, we desperately need inflation. We need it. But of course, with crashing commodity prices, crashing oil, then what have we got? Well, yeah, we've got consumer price inflation. We've got inflation in stock market prices. We've got yeah, absolutely, indeed. Yeah, no, I quite agree with you, Pan. Yeah, very hard to justify those rising prices, but. And of course, we've got asset price inflation. So people are sort of feel good factor because their houses are worth an awful lot more than they were. So is it all going to continue or is it not? Well, gold at the moment on the daily chart is, well, look at that. Have you ever seen a saucer bottom? It's a saucer bottom at the moment. Now, it may or it may not mean that we're going to get a decent rally coming out of this. Well, we've had previous rallies and God, look at this. Just looking at this chart, we've got an A, B, C covering the entire expanse of the paper here. So gold is not quite sure. It's not quite sure whether we're getting this massive inflation. And what we're finding that fundamentally, then the gold market, casting aside all of the chat, the alternative blogs that are telling us the manipulation in the gold price to keep it low, casting all of that aside, it's really telling us that it's not quite sure whether we're going to get inflation or indeed whether we're going to get more of the opposite of inflation, which is recession, deflation, etc. in asset prices. So for me, I wouldn't be at all surprised if we are waiting for another leg on the downside. So anyway, that's just a wild assumption based on nothing other than just looking at what is going on with the gold price. Now, if we're going to be looking at what is something reasonably momentous that's happening, well, we've got an each-way bet there on gold. We've got something of an each-way bet there on stock markets. But what about the dollar? Now, the dollar index is the DXY, little basket of currencies, and the dollar. Let's run this one out to the monthly. Goodness me, we've got a great big pattern just showing there. But let's squeeze some more information on here. Then, what we're potentially looking at is this previous high. Could price get itself back up in that region where it has been? And of course, this is going right the way back. Now, can you remember what fueled this run? Which started off in the early 90s. It ran right the way up until 2001 or 2000, effectively. And then it just tumbled right the way back down. Of course, that was the tech boom when money was just piling into the US stock market as sort of valuations, PE ratios and so on just hit the stratosphere. Way beyond any valuation that any company could ever match sufficient earnings to justify those PE ratios. And then the whole thing just collapsed out of the sky. Could we find ourselves going back there? Well, we think that that's possibly a little bit unlikely. But if there's going to be another stock market rally, those who are looking for the fifth wave, then I suppose it's possible that things could happen in that direction. What is happening wave-wise? Well, let's just have a little glance at this. We've got this little move up there. We've then let's call that a wave one. We've then potentially got a wave two. I say potentially because Elliott waves, we're certainty on Elliott waves is something we've always got to be a little cautious about, and then maybe, just maybe, what we've had up to, well, let's just see, I've got this blue showing in here. It's not helping. And maybe what we've just seen with this correction is just that. It could be a little wave 4 correction. There's a bit of ABC in it, which we like to see. And so what we might be in right now is the start of the fifth wave. Where is that fifth wave going to go? Well, we could just do a little bit of Fibonacci, and it could go to that region. Just look at it. Right the way up there, there could well be a substantial rally yet to go with the dollar index. Well, let's just bring this down a little bit, bring it down to the daily, and let's pop a line across previous high, and look where we more or less are. This is the critical level. This is the critical level the price needs to get up to. And most recently, over the holiday period and prior, we've had this little mini ABC. That picked up, look at that. We've picked up a 50%. We then get this little move down, which from this low to high has picked up a 38.2. And there's also another little harmonic, which I wonder if that'll pick up. No, it's not actually. Yes, it is. It's picking this up quite neatly, actually. We've got this little correction down to an 88.6 at bat level. And away we go. So we're at a critical point right now, which is this just pre-holiday high. Let's see if it's going to break through there. Every day's trading since this low is suggesting that that's exactly what we're going to get, a break of this high. And let's then see what it's going to do up here. So, coming back to, the title of what we're looking at, where is the balance of power? Well, we can see the balance of power by putting together various things. We can look at price action. We can look at some of the harmonics, which I use extensively, and we can look at one or two indicators. This is one that I'm now using quite extensively. Of course, there are many other oscillators which are very, very, very useful indeed. And all of this is telling me right now that the balance of power most definitely is with the bulls, with the dollar bulls. Considering sort of fundamentals, well, yeah, fundamentals are suggesting we've had this rate hike, this 0.25%. We understand that it's going to be fairly difficult for the Fed to keep it going. But, we know that they have been sort of wedded into telling us that the economy is improving, feeding the feel-good factor back to us. So we keep doing what we are supposed to do, and that is keep spending money. And it's quite interesting. UK domestic credit card debt and so on in the prior Christmas period has reached new highs, is it? Or at least massive numbers. And, we're told that, yeah, that's brilliant. That's great. People are spending money. They're going to keep the show on the road. So is there anything to stop the dollar moving higher? Well, until there is a big problem. Yeah, that was the number. Yeah. Nice to see the BN at the end of it. Yeah, the billions, greater than billion. You know, of course, there was a time when domestic indebtedness was actually a big problem for the economy. But no, 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 no. It's great now. So get out there. Keep flashing the plastic. Keep flashing the plastic, and that'll keep the show on the road. So with this general pattern, and with the US economy, which, you know, the alternative blogosphere is telling us is absolutely shot to pieces, but the economy officially is actually doing quite nicely. And that's exactly what the dollar index market reckons is the case. So there doesn't seem to be anything to stop and derail the dollar yet. But there will come a time when all those analysts are saying, yeah, no, hold on. We got it all wrong about the American economy not being terribly good. The alternative blogosphere will tell us that we got it wrong, and it's all great now, and it's all running, and the dollar, assuming we do go to this, really get going on this fifth wave, and it does move higher, they'll be then telling us that, well, it could now go so much higher. That is the time that it might be a good idea just to start selling. Right, now let's go somewhere else. Let's go and look at the opposite side of the dollar, because the euro is still something that it may well be worth just considering for a bit. And here we are. Right, we've got some harmonics on here, which, yeah, I mean, so often, that's exactly what we find, though, Pan, isn't it? That we're not doing what we're supposed to do. We're not doing what we're supposed to do, and there we are. But we all like gathering stuff, and I've got to a stage in life where I'm having to sort of jettison a load of stuff because we end up with far too much. Right, now, let's just look at the longer term. This is the euro, the dear old euro. Whoops. Getting slightly carried away here, folks. And what we've seen then is that over a period of time, look at this. This is going way back. Do you remember the 90s, year 2000? That was where we've got this move down in the euro, is where we had the massive run up in the dollar index. So this all is just running counter to what we've just been looking at with the dollar index. We've had this brilliant 5-wave move on the upside as the, down came the dollar, of course. And then we get a peak. And since then, we've got this sawtooth thrashing around where, and this most recent peak, look at that, got up to a 50% fib level, or I should say a GAN level, and then it just collapsed on down. Is there more to go? Well, again, do we know that for certain? Of course we don't. But it would appear that the odds are that if that dollar index is going to go moving higher, and we then look at this trend, well, trends are most likely to continue, and we've had a little bit of a rally. Now, the harmonics actually picked out that rally for us. We've got a 1.414 extension, we've got a butterfly level, etc. We've then got, neat little 70.7. We're at a key juncture again. And this is the pattern. This is the little pattern. The question now is, will we get a rally from here, or is it just going to collapse on through? We've got a neat little 1-to-1 level picked out. And so that's going to be the key. If we get price then dropping down below here, the chances are that, away we go further on the downside. And at the moment, well, the software is telling us to expect that. Now, despite the fact that we've got this harmonic sort of picking up in probably not quite the right place, we just ignore that for a moment. I'm just going to knock the harmonics off. What do we got? Get the right one. And here we are. We've got just our pattern showing together with what the swing trend is telling us. It's telling us it's now down. We've definitely got the activity index telling us that it's well and truly down. And this little price action move where imprint this on your brains. Draw a little diagram right now. Where you've got a massive move down, we then get an A, B, C on the run up, okay? This high is higher than this high. Well, let's just put a peak line in it, okay? That's the peak. So we've got an A, B, C. That's where this move runs up. That's the B. Okay, sorry, that's the start of the B. That's the A move, the B move, and then we get the C move, goes higher. And then it collapses on down. Ideally, it sort of kisses this neckline area. I think another line, let's just pop another line on it. It sort of comes close to that level, might even drop a little bit below it, but then this is the real key, it forms a multi-point reversal. Now, multi-point reversal, an MPR, is, to my mind, and it's something I've been using for years, one of the most effective ways of just picking turning points. And there we are. We've got a 1, a 2, a 3, and then it rolls over. It rolls over. And this move is confirmed for the moment. It all started just, well, here we are. This is day 2 of the main trading week, but it all kicked off on New Year's Eve, and this has got the potential then to move considerably lower. And that links up then with what we've been seeing over there with the dollar index going higher. So there we are. Got a beautiful little pattern for you there. And you can trade this in all different time frames. Now, let's go to, we'll be taking requests in a moment. I'm going to look at something. Yeah. Let's look at the loonie. Okay. Canadian dollar, or at least US dollar against the Canadian dollar, I should say. There it is. We can sort of see that quite clearly. And what we've actually had is a very, very good run up. And a good many analysts were telling us that this little correction area would work into a collapse because it's all down to the oil price. And if the oil price, well, the decline, or at least the US dollar getting strong against the CAD, could be set at the fact that the oil price has just collapsed. Now, there are those who are saying that oil is about to go on back up. And there are those who are saying exactly the opposite. So we don't really know. We've got to be a little bit cautious then and consider that this could all change, but price action yesterday was really very important. What the software has been telling me is that this area is a potential top. And indeed, my activity index has just been telling me that quite clearly. A series of red histograms coming on back down. Then the swing trend said, right, look, get ready for a break. And for a moment, I say for a moment, well, for quite a few days, I've been ready to sell this. But there are two things that have been stopping me doing that. First of all, I needed to get a decisive break under this trading range of a series of days. Didn't get it. Didn't get it. So that was reason number one for not wanting to get involved in such a move. And then we're looking at the waves. So what we've actually got, if we just take this most immediate area from this low, we've got a wave 1, we've got a wave 2, then we've got a wave 3. Now, the question is, where are we putting this wave 3? Well, I'm looking at this and thinking, well, we've got this long extended wave 3. That gives us, just over here, a very muted wave 4. Would have thought we're going to get a bit more of a correction. And so, right now, could we be on the cusp of a wave 5? Price action is telling us that just maybe we are. And this, of course, would be consistent with, it's the US dollar against the CAD, with the dollar index moving on up. I've now just had my software telling me, look, it's now moving. This is moved positive. Activity index is positive. Swing trend is positive. Price action is positive. The trading range did not break out on the downside, positive. And it's broken the range on the upside. So, here we go. Right. That's I use Elliott Wave. I mean, it's something that can't be ignored. And there are aspects of Elliott Wave that I use time and time again. Now, yeah, I've no idea. I don't know. Looking at targets, it's quite interesting. There are all sorts of ways of determining what a target is going to be, and there are ways that you can relate wave 5 to wave 1, and that, for me, has been the most accurate. So if you take the length of wave 1 and project it forward on wave 5, that seems to work quite a lot. Sometimes wave 5, after a particularly dominant trend where there's been a really strong wave 3, as it looks as if there may well have been with the loonie, then it's entirely possible that wave 5 could be a really short mini wave. So until price action actually tells me, I have to say that I don't come down hard and fast on it. But what I do like to do is to get in on the start of a wave. And at the moment, then, I'm long on that one. And let's just wait and see where it goes to. As it starts to get a little bit mature, as it starts to run up Fibonacci multiples of the wave 4, then I will start to pay attention to it. And how do we do that? Well, we just sort of put in extensions. Let's just do this correctly. In fact, let's just do it on this one. We just sort of do little projections. We can project higher, and what we can do is that so often we get a peak which will run up. Now, this one was expected to go to 161.8. It didn't, but it got to a 150, and then it decided that it was that was going to be enough for it. So there are quite a number of ways, and in my course, The Harmonic Wave Trader, which brings in some of the software that you've actually just been looking at, then I do go into these principles in a reasonable bit of detail. Yeah, there we go. Just put the harmonic back on. And what this will very often pick out for us are areas of interest. Now, if we just look back on this area of interest, this is the start of that wave we were just looking at, then we When, for instance, we've got a correction here. It came down to a 61.8 of the high to low, and in terms of extension, it hit the false break reversal level. That helps me just to decide where it is that I want to sort of place my trades. But price action is the strong determinant of it all. So we're looking then at this other pair, this US dollar CHF, and again, what we've seen is that we've got potential set of waves. It's very similar to what we've just been looking at with the loonie, and this one has given a signal. In fact, it gave the signal on New Year's Eve to take the long. Could we be on for another strong wave? Possibly. The software right now is saying, look out, there's a potential butterfly which might come into a collapse. Well, we don't know. Yeah, there is, Gunnan. Yeah, but it not wanting to be too disparaging about it, most of the automatic software that I've seen to pick out waves is not very good. It's not very good. And I actually find that the very best way to do it is to eyeball it, draw it in manually, check the Elliott wave rules that there are to make sure that it's correct, and I find that really the most effective way. Software, I've certainly got the automatic fib finder, which is brilliant. That just operates in the background. It doesn't sort of redraw itself. It doesn't change its mind. But once a higher or low has been put in, then it's there instantly, and it tells me if it's at a critical level. So what I've got is a combination then of that software there. I've got the fib finder, activity index, swing trend. These are things that I use all the time. I will actually go to another little twist in it, which adds in these colored candles. And these colored candles then tell me the amount of volume activity there is. Now, I've got two volume measures. The activity index is based on volume activity. And also, I've got these individual candles, which tell me what the activity is on each individual candle in relation to the previous candle. So it's a little momentum measure. Now, let's just look at this one for a minute. Yeah, harmonics. Well, I mean, it's all to do with Elliott wave. I mean, it all comes from Elliott wave. RN Elliott. Grab some stuff on RN Elliott, or grab my harmonic wave trader. Tell you all about it. And he observed that stock market moves ran in cycles of 5 waves, up followed by 3 corrective waves, and also works in reverse. Then it became apparent that Fibonacci reversal areas, of which we can see one here on this chart now, it's telling us that's a bat level. Software just picked it out yesterday. Now, if we just look at this one, and geometric trading, it's called all sorts of different things, thanks, Richard. So it's a very useful tool. I would not personally be without it. I use it all the time, and this is really the extent of my software, if you like, putting various things together. And let's just work through this one for a moment, because on the Euro GBP, it was falling out of the sky. And if we look sort of longer term, it's been in a big downtrend. It might have further to go. We don't really know. All we can do is trade what we see when we see it. And when it was at these sort of much higher levels, around about sort of 80, 85-ish, it started to collapse, and it seemed that to get the correct balance between the British pound and the euro in terms of what the pound was buying, what the euro was buying, then it was just too high, and it needed to come on down. The euro needed to collapse further down. And we've seen that collapse. So it came down to a level, and we can see that it's come right the way back down to Well, this general area, 2004, and if we go a little bit further, could there be further to go? Well, there could be, but we're most definitely, if we just consider standard principles of support and resistance, if pop a line across there, look at that, that's an area of support, and that's exactly where it's been finding support quite recently. Now let's come right the way back to where we were with the daily chart. And this is how I'm looking at this. We've had a substantial run down. We've then had a substantial rally, and it's been a whacking good rally, a really good rally. Got several things here telling me that I need to be a little bit cautious on the upside. The bull move started right the way down here, okay? We've now got a series of waves going higher, and yesterday it looked very much as if this was going to go for another big leg up. But wherever you've got a previous high, that's where price is most likely to find that there are sellers. And sure enough, the candles have been telling us that. Now, if we also look at these candles, we've got red ones, which means that there is a lot of volume in there and a lot of activity. And then if we look at the blue ones, it means exactly the opposite. The green ones are average volume. We then had this run on up, but look at this. Just, prior to the holiday season, you can imagine that the amount of volume activity would tend to drop down a bit, and sure enough, we've got a whole series of blue candles. And that little series of candles are telling us that the amount of momentum there is to keep this move going up has actually started to tail right off. We can also see on the activity index that we're now starting to get a bit of divergence. Price going higher from around about this level, price going higher, but activity index telling us that the amount of volume on the upside is just dropping off. We then get this red candle, and look at it, it's a shooting star. It's got a long, long tail in relation to the body, and we get exactly the same thing that happened yesterday. So the early part of yesterday, it looked like we're going to be on for a really good further run, but it ended the day with another, even more powerful shooting star. Today, we've actually had the breakdown. We've had the breakdown in the swing trend, price action, and of course, the activity index. If this one then ends the day in more or less the region that it is right now, and tomorrow brings a follow through, it's a resounding sell. So anyway, there we are. I'll just show you all those bits of software. But all of this comes from my various courses. You mentioned the Harmonic Trader, comes from the Harmonic Trader, the Extreme Swing Trend course, and the Extreme Activity course. So sort of 3-in-1 there. Oh, but I mentioned there'd be a special deal on all three. So there we are. That's just taken a little glance at various markets. I hope you guys have found it useful. And quite simply, what appears to be going on. Oh yeah, let's just take a little look at the Jappy. What appears to be going on is that we've got a fair old bit of dollar strength absolutely driving this market. Yeah, we'll squeeze a bit more time, Mosier. And it's this dollar strength which has really been moving on. Now, this one is bucking the trend. It's bucking the trend. So let's just add on some harmonics. Let's run this out to a monthly. And what have we got? We've got this massive rally. Massive rally. We can turn this into a neat 5 waves on the upside. It's look at that, a 1-to-1. So it's picking out another previous peak, which is where we are most. Yeah, okay, we'll go to silver in a moment. And, we get this peak where there is most likely to be resistance. Where we had the maximum number of analysts, also the commitment to traders reports, were showing that all the world, his dog, his wife, and everybody was short of the Japanese yen. And of course, we heard all about Kuroda, etc., telling us that they were going to do anything in order to boost Japanese inflation. And that meant just print, 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 print. But of course, the market, by that time, had thought, okay. And they started to look into the background a little bit and thought, right, well, now the market seems to be going through a phase of needing to unwind all of those shorts. And that just maybe the Japanese economy doesn't need any further stimulus. So on this monthly chart, this is the first month hedges are now telling us to sell it. Sell the US dollar against Japanese yen. So this is bucking the trend, and this is all about the Japanese. It's not about the US dollar, this one. It's all about the Japanese yen, looking very much as if it wants to get stronger against the US dollar, having weakened like crazy. So we're just in a phase now. We could be on an A move, a B move. We could be in, at the very least, a C move that could have enough power to push it down below this overall pattern. And the software is telling us that. Look at that. December, a bearish month. November, a month that tried to go higher but couldn't really make it. December tried to go higher, couldn't make it. January, we're breaking. We're breaking. So there we are. Standard head and shoulders. In there, we've got a load of waves, we've got a load of harmonics. We can actually just sort of work through the whole thing by a bit of a combination of those, but we can just eyeball that this is a head and shoulders, and it's now just waiting to break down. Right, okay, silver. Let's go and have a glance. Just wait for the computer to catch up. Whoops, wrong one. There we go. We got silver. Let's put some harmonics on. Now, silver, let's look at the longer term. Let's do a bit of both here. Right. Here we are, languishing around about the 5 level for a long, 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 long time. Now, I can't go right the way back. No, it won't let me. But you may remember the bunker hunts. Now, the bunker hunts thought, yeah, brilliant. We've got a couple of $1 million or so spare that our daddy and granddaddy sort of left us. We'll make another bunker hunt fortune. And they decided to corner the market in silver. And what they managed to do, they ran it up to around about $50. Now, this is way back. It's sort of way back beyond this chart. It's another 10 years prior, or slightly more. So it ran up to 50. The price collapsed. It was a price support system. Price support systems never, ever survive. Never, ever survive. Yeah. Cocoa price support, sugar price support, coffee price support, copper, tin price support. There have been, the Copper Council, the Tin Council. Over the decades, there have been umpteen of these. They all run out of money because whenever you've got one big trader organization on one side of a market, the arbitrageurs come in and knock the hell out of it and break it. They just break it. Always happens. Always happens. So whenever you find anyone attempting to corner a market, well, just wait and wait and wait. Look for your moment and take the trade on the opposite side. Eventually it collapses. So that's what happened with Bunker Hunts. Right, silver starts to take off, and it takes off with gold, and we find that where does it run to? More or less to where the Bunker Hunts managed to push the silver price. Oh, they lost all their daddies and granddaddies' fortunes along the way, of course. We then had this massive collapse to bring it back to something akin to what might be reasonable value. And what we've seen is that the linkage then between silver and gold, and I mentioned the gold oil ratio before, but what we also want to consider is the silver gold ratio. Now, silver in relation to gold is looking cheap. It is looking cheap. And there are those who are saying that with whatever little move we're going to get, the ratio of silver to gold is going to improve. So the idea is that you buy silver, you sell gold. Get your proportions right, and it can do quite nicely over a period of time. But what is the chart telling us? Well, it hasn't found a bottom yet. Okay, this is monthly. It's come right the way on back down to a support area. And let's just look at support areas. This was going to be the first support area. And look at that. We can see quite clearly we got peaks here where there was resistance. It becomes support. It broke. It broke. We've then found that price on silver looked as if that is the next level of support. And look at it. We've got clearly a little bit of support over here. And we've got resistance here. So a classic support resistance zone. It has not bottomed yet. Look at that. It's just nudging underneath. Where is the next strong level of support? And this is the question. Could it be right the way down there? Could it collapse that much more? Well, there are a lot of analysts saying that support would hold and we were going to get a rally. There are a lot saying that this current one would hold and we're going to get a rally, and we haven't seen it yet. So this is telling me that there could be, possibly, maybe, further downside, despite the fact that, I've got one or two harmonics are suggesting that we could get rally points. And yeah, we could well get rally points. But for the moment, I think longer term, I don't think the decline is over yet. So there we are. That's just a wild assumption, but just purely based on support resistance. And, this is an important bat level. It might hold. It might hold. But price action coming right the way down to the daily, it's a little bit like gold, where it's just meandering around and we're not quite sure whether this is going to really get going yet. So we got to wait and see. We've just got to wait and see. Right. Okay, guys. Well, look, I've actually got to crack on and do one or two other things. The MPR, multi-point reversal, is a very simple concept, and it's the concept of the higher low. If we just go back, if we just go back to, say, that bit, we get price that moves down substantially, forms a low. It moves then to a high and comes down to a higher low. That is, in its simplicity, a multi-point reversal. We mark that up as being a 1, a 2, and a 3. We then get a 4 and a 5, and we need to be taking our trades at the odd numbers. Simple as that. All of that is explained fully in my course, The Breakfast Trader. The Breakfast Trader. There's more to it. Yeah, I mean, the 1, 2, 3 pattern, Victor Sperendio is the man who actually originated that, and brilliant book. You want to grab the first book he wrote, Victor Sperendio. It's brilliant. And he's got all about the 1, 2, 3 in there. But you then need to add in a whole series of other bits and pieces to it. Just in itself, it's as with most techniques, it probably, it's useful, but you need to you need to pad it out somewhat. So anyway, there you are, guys. Look, we've had a good session this morning. Enjoyed being with you, and great questions, great questions. So do take care in the markets, and just trade what the charts are telling you to trade, not what the analysts are telling us. Right, the book is by, and I cannot quite remember the full title, Victor Sperendio. So yeah, just do an Amazon search on. Right, so make sure everyone gets this. All attendees, send. Yeah, there we go. Fine. Anything that you want to find out about the various courses I've mentioned, you will see them all here. See if I can just get the spelling right. All attendees, there we are. Click Events Co UK, and you've got various links to the various courses. So keep in touch, guys, and enjoy your trading, and let's make 2016 a really good trading year. Bye for now.